Hey guys, it's Brett here with Numbers of Finance. We're doing a market wrap for Wednesday, May 1st. First thing, we're taking a look at the daily chart here for SPY. Big red candle today. I think this is what we've been waiting for a long time now. Some impulsive selling of about 1% total. That red candle is what you call an engulfing candle. I'm going to zoom in real quick. From the open to the close of this candle, it engulfs both the body of the candle before it, along with the wicks on top of that. That is a very bearish sell signal in the short term. And on top of that, I think that adds to the longer term bearish case that's been laid out for the past few weeks. It just so happens that today we reached the highest point that SPY's ever been. Or a decent chunk past those highs that were made back in September, early October. We've been trading at fairly low volume compared to what we've been trading in the past during that volatile point at the end of 2018. And today, if I zoom in on these volume charts, our volume's just starting to spike back up, today and yesterday. So if I'm just to analyze what I'm seeing here, we're finally seeing higher volume, red candlestick, engulfing candlestick. To me, it's not 100%. Again, nothing is, but to me, this looks like the strong-handed longs are finally starting to step out. Market's made a new high, so really it's no man's land up above. Whether it grows any further. I believe, based on the technical analysis I've been seeing over the past couple weeks, the market's severely overextended. We've finally hit a very high price, a sufficient selling price for those longs that might have been picked up, back in January. And a big red stick like this, especially an engulfing one at this higher volume, if volume continues to pick up, I think that's definitely a good case for the, for the bearish case to play out over the next couple of weeks. Now I just mentioned strong-handed longs. What I mean by that, a couple of these red sticks that we might have seen in the past, they're very small red sticks. So, I've been advocating for this long-term bearish case for a while now, and you might think I'm nuts because we go weeks and weeks and weeks. This we're probably grown 30% from the bottom of January, about 25%. So for weeks and weeks and weeks, this long-term bearish case never played out, and every time we see a red candle, it hints that maybe it's starting to happen. But this is the first red candle that we actually see selling with some authority behind it, with some merit behind it. This one has a lot more substance than the red candles we've seen in the past. And it's also the first engulfing candle that we've seen in a long time, since, maybe since back during these volatile points between October and late December. So simply put, as an advocate for that bearish case, I did like to see the candle that we saw today. So now I'll switch over to the hourly chart just to analyze how the actual day performed. See, starting here at 9:30, the market fell down and increased throughout most of the day until it made its new annual high, the high beyond what we were in September, October, highest point we've been at this week. And then we saw a sell-off in the close. Typically, when a day's going green like that, especially when we're overextended. That's just a little bit more of greedy buying throughout the day, but traders panic, investors panic. They don't want to be in any longs through close, especially when we're this far overextended, and that's why we see big selling at the end of the day. These two giant red candles essentially cancel out any gains that were made throughout the day. On top of that, we also see this giant spike in volume at the end of the day, and seeing that really high volume sell-off is definitely big for the bearish case. Even looking at the MACD here, momentum on the hourly chart, obviously some huge bearish divergence over the last couple days. Our prices are making higher highs and this MACD is making lower highs. Sell-offs, engulfing candles, just a lot of stuff pointing towards the bearish case. If I were to make a bold claim, I would say that this is the start of the bearish swing. Today would have been the day to get into some shorts. So today I'll go back over the daily chart, being that today was only about a 1% loss, just shy that we saw. You could make the argument, well, 1% is not nearly as volatile as some of the red sticks that we saw back during those volatile periods. There we see like a 3% red stick, stuff along those lines. So I'm going to explore what individual stocks we're doing today in the market. Here back on FinViz, this map kind of shows you how individual stocks perform. Some of our big names like Google, Microsoft, Facebook, Amazon, Apple. Everything's red across the board. You see a couple tiny greens here, except for Apple. This is a big green. So what would explain something like that? Let's pull up the Apple charts. Look at that, a large gap, 3% from the close yesterday. We peaked at almost 6%. Look at that daily wick there, peaked almost 6% up from yesterday's close, and then fell back down as the market began to sell off. I'd say the only reason Apple gaps up like that, and Apple being one of the biggest stocks in the market, I think it is the biggest stock at this moment. I don't know if Microsoft is above it at the time. Either way, a price gap like that, it's not something that came out of nowhere. Apple released, they had a conference call, and stuff like that is what's going to cause, major fluctuations. And if Apple's moving like this, the market tends to follow. But, as we can see, the market as a whole is very red. Apple kept it afloat for most of the day, but with that sell-off at the end, you saw, we see even a drop of almost just above 2% in Apple itself, and that sell off at the end of the day, and that's definitely even more supportive of the bearish case. I'll switch over to the weekly charts on SPY. Alright, so last thing I want to cover, I cover this pretty often, those MACD divergences are still in play. I don't know why my mouse is acting funny. There we go. MACD making lower and lower highs. Especially from these highs in early 2018. Here was the first divergence that led to our sell-off into January. And the MACD is even making a lower high now as we're reaching our highest prices the market's ever been at. So again, that long-term bearish case is definitely in play, and especially with the red candle that we saw today. If this week continues to sell off and if volume spikes, that MACD is going to top off on the weekly chart there, and we're going to see another dip that'll, definitely play into that bearish case. Lastly, I'm going to take a look at, we're going to look at the volatility futures slash VX. Oh, geez, I'm uncoordinated. Let's see what this green daily candle is. Almost 6%. So if you're trading a ticker like TVIX, it's double leveraged. 6% green candle is about 12% gains. Taking a look at the, we're on the weekly chart. I'm a goofball. All right, we're on the daily chart here for the volatility futures. These divergences have, these are really, really solid divergences. This is actually a bullish divergence. We've been looking at bearish divergences on SPY. A bullish divergence is a little bit different. The lows on the MACD are increasing, while the lows on the actual future itself are decreasing. We're making lower lows on prices while we're making higher lows in the MACD. We see like slight corrections, gaps on the volatility indicator here. The reason for that is that the volatility indicator, it has a lot of drawdown, as there's a lot of fluctuation. When we're making 6% movements in a day, there's drawdown over time, so they have to correct those, and that's what those gaps up are. But essentially, the fact that we're making new bottoms that are roughly the same after a correction up, if you saw that on any other ticker, this low here on prices would actually be significantly lower. Same with these lows over here would be roughly the same. So that bullish divergence is finally playing out with that 6% day, so this is definitely something to watch. The volatility indicator is typically going to run opposite the market. If we have any high volume selling, this volatility indicator is going to spike like crazy. And I think that's the last thing that really advocates for this bearish case. Definitely something to pay attention to over the next couple of days. If I were to draw a bullish case for you guys real quick, any candles that erase the losses, the sell-off that we saw today, especially going into the end of the week here, it could definitely make a case for the bulls. And if we make another high preceding this, that bearish case is going to start to lose its divergences, and it's really not going to be playing out at all. So definitely the weekly closing price is going to be super important here. Anything above it, definitely strong case for the bulls, but if we start to see a continuation of the sell-off here, this could be the bearish swing. That just might have as much magnitude as the swing did back here, because that weekly divergence is still in play. The weekly divergence that started back in early 2018, the divergence started there. So essentially those divergences mean that the trend overall should be changing for the downturn, and considering we're above where we are now, I could very easily see a sell-off of high magnitude that goes even lower than January. I hope you guys found this video helpful. If you did, like, comment, subscribe. That helps us out. And definitely check in tomorrow and Friday for videos. We do these market wraps daily. So have a good one. Get your numbers up.